Hey, Steve.
All
What's
right. Thank you,
going on
Scott.
today?
Thank you. Hello, Andy. Happy Tuesday.
Yes, hello Steve and Scott.
There
How
he
you
is.
guys doing?
Good. There is Andy. All right.
Yes.
So thanks for showing up, everybody. See some familiar names, probably a few people in our yesterday's webinar, and that's good. We encourage habitual binge watching of our webinars. I'll just get right into it. The little tease that Scott was talking about, I kind of jumped in there and chuckled, was the fact that our web version just went live today with the AI Holly channel on it. So the HTML5 version for people who use a Mac and don't want to use a virtual machine or a parallel, our HTML5 web version is getting better by the week. And so on your own, if you guys feel like it, you can always just go to our homepage, trade-ideas.com, and right there under the picture, you can log into the web version using your username and password and nose around there a little bit. Maybe we'll do some content next Tuesday on some more advanced features of the web. But what Scott was hinting at and what we're all real happy and excited about is that the production version of the web tool of Trade Ideas now incorporates the AI. And that was a big hurdle that we were trying to get past to really get the HTML5 version up to par with close to the downloadable version. So that was the good news of the week, and maybe we'll play around with that web version a little bit next week and show you guys some of that stuff. So this is the trade of the week. That's the theme every Tuesday, hosted by myself and Andy. The two of us are primarily responsible for the curation and the location of the short list of symbols to curate and choose each week, and so it makes sense, perfect sense for the two of us to run this webinar and talk about the trade of the week in addition to some other things. But before we get to that, the old disclaimer page, you guys understand that we are not giving you solicitations for trades or financial advice. We are a software as a service company. We're content publishers. So we're going to show you some of our services, maybe give you a couple of ideas, and just kind of take it from there and go from there. But please do not consider this webinar anything to do with soliciting financial advice or recommendations. You guys are on your own, just like we are. You're not alone. As I just said, you're alone. You're on your own. But with Trade Ideas, you're not alone. This is one of the things that we'd like to talk about every webinar because it's very important, the onboarding and the concierge. So we're talking now to the people who took the poll earlier and do not have a subscription. The customer service here, I think, is second to none. Same with the product is second to none. So you got a second to none product, which is very intensive. And our onboarding and our customer service is the same to try and get you guys up to speed and up the learning curve as quickly as possible. A couple of those tools are pretty much the trading room every day during bell to bell. Barry Anderson is hosting, moderating the Trade Ideas trading room, which is free, does not require a Trade Ideas subscription. So it's a great place to come in and kick the tires, ask some questions, and watch and see what the community is talking about and trading. And also, there's a lot of sharing going on in here of different cloud links and configurations for alerts and scans. So great place. Free is a wonderful price, and you can't complain with that. There's not too many people that I know of that can do what Barry is doing. Andy and I did it for a few years, and it's grueling. Let me tell you that. He does a great job. The webinars, including this one, Monday, Tuesday, Wednesday, Thursday, we have 4 different webinars with different themes. I won't go through them all, but they're all 2 o'clock Eastern time for the most part. And today's focus, again, is on the trade of the week, which is the email that comes out Monday morning with a swing or slash position trade idea and the reasoning behind that. It's not a day trade scalp. It's something that's a little bit more slower paced. And we'll talk today again about how we derived it, how we found it, and why we liked it, and what we think might happen. So tomorrow and Thursday, 2 more webinars at 2 p.m. Eastern. Friday support sessions. We ditched the webinars, and at 11 a.m. to 2 p.m. Eastern for 3 hours, we basically open up the forum, just like you guys see right here with GoToWebinar, and question and answer is the intended idea there for technical support. Maybe somebody signed up on a Tuesday and they've got a couple questions. Well, by Friday, they can drop by and get a lot of those questions answered before their one-on-one session, which is not on here. The one-on-one session, again, for those of you who have not subscribed, after Scott gives you a promo code and you consider that you do get a 1 hour free training lesson from us. So it's just you and us, two of us, not a group session, but we will address your needs and help you on your own learning curve level and get you up to speed in where you want to be using the product. So that in itself is a $99 value. A lot of people do come back for a second or third 1 hour session and they pay the $99, but just remember that the first month is free. So with that, with a promo code, 15% off, really making it attractive for you guys to kick the tires and try this wonderful product for at least 30 days. And with that said, that's why we continue to show the subscriber growth. Everything I'm saying is relatable and validated in the trajectory of our net subscriber growth. We thank you all, especially those who have been with us for a while. Good things still to come. Last slide before we get to today is the Brokerage Plus. For interactive brokers, again, this is a tool for auto trading. Auto trading with like 1 click, 2 click go, or just turn your back and let the alerts actually do the trading for you. Now, it is intense, and therefore it does not warrant somebody who's only been trading for a couple of months to start looking into this. You really should learn how to crawl before you can walk, and walk before you can run, and I would consider this running. So still in beta, but it's a cool program. It's a cool tool for people who have trade ideas, scans, and know what they want out of the market, and are willing to trade with a robot and turn their back, or just use it as a shortcut right click to send orders to IB. Interactive Brokerage is first. We don't know who's going to be second, but when it comes out of beta, we'll probably have a better idea of where we're going next. And so here we go. Same theme as always, and that is that no man is better than a machine. However, no machine is better than a man with a machine, from Paul Tudor Jones, great trader. And that is the theme of Trade Ideas. You guys are the human element and we are the machine. And together, those two are much more powerful than just a machine by itself. So I love that saying, and that's why I keep it up there every single week. All right, let's see here. All right, so a little bit of an agenda sneak peek, typical market recap, and Andy and I do have a few things to say about what we're seeing in the market and how it ties into the recap of Holly's history today and yesterday. Trade of the week is derived from a scan called Let's Go Fishing, and we'll break that scan open and take a look because it was the same scan that also had last week's trade of the week, which did pretty well, Spirit Airlines. The flip feature, some of you might be aware of it, but we're going to show you really the value and the power of using the flip feature and making it super easy. We'll do a sector glance and take a look and see what sectors are going strong, which ones are looking weak, and then I think we might have time for 4 or 5 chart requests at the end of the day. So please save those chart requests. Don't type them in now. Wait until we say we're going to go ahead and take some chart requests, and then those that are fast on the draw, we'll maybe take the first 5 or so and take a look at them. And it always helps to know if you tell us if you're long, short, thinking about getting long, thinking about getting short, sold half, whatever. That all certainly helps. Okay, so with that said, let me minimize that, and we're going to go and talk about what's been happening in the market. So today, as it were, it registered the first 3-day decline in a couple months since August is what I heard. And I know it's kind of hard to tell with these goofy candles, but we basically closed right there on day 1. I'm not going to mark it up, but there was day 1's close, day 2 close right here, and day 3. So we had 3 consecutive lower closes from the day prior. And we have not had that since August. So I thought that was worth mentioning. You didn't know that, did you, Andy?
No, I didn't. No.
So
I haven't been on Twitter today.
Now, I assume there's a good contingency of people in the room today that were also in the webinar yesterday. So some of the stuff I'm talking about will be repetitive, but it'll also be in addition to what we had to deal with yesterday and what we know now today with a new candle. And what I was talking about with Jamie yesterday in the market recap was that, let's start here. The trend line of the S&P is still very much intact and has been going back a full year, back to December. Some of you may recall right here, we broke that trend line with some downside volume, and I got bearish for about a week and a half and then quickly flipped my hat as the technicals told us to do so and bounced right back off that trend line. But what's happening here? The trend line is getting steeper. Well, the trend line isn't getting steeper, but the price action is getting steeper. And we would call this a good old-fashioned overbought market, basically, a couple days ago. The more we get away from this trend line, the more overbought conditions will start to build and percolate in the market. And I think what happened on Friday, I want to focus on Friday's candle, this giant dipsy doodle downward draft, and all the way back up. It's not really important as to why it happened. It was basically a news report that kind of had to be disseminated and discussed, and then realized that it wasn't really the news that the headline said it was. But forget all that. What this candle shows us is exactly what I was saying. The market and the participants of this market are very keenly aware that we are in some overbought territories here. So when you see a little news report come across the wires and the market absolutely has a panic attack and drops all the way down and then basically spends the rest of the day recovering, what does that tell us? The tell of this candle is that the market is indeed operating on a hair trigger right now. It's looking around both sides, left, right, seeing who's following it, making sure it's aware of its surroundings. Because, if we hadn't have been in an extremely overbought condition, maybe even oversold or in a range, I don't think this kind of sell-off would have happened. And that dovetails, into the trade of the week. We try not to pick trades of the week that are just trend monsters, because the trend monsters, eventually, they get taken down pretty quick. And we'll come back to that when we get to the trade of the week point. But when you have an overbought trend like this and you see a candle on Friday, all it did was make me aware and keenly aware that, yes, this market is extremely skittish. All right, it's on a hair trigger. It didn't take much to set it off and send the algos and the bids retreating and the algos chasing. So that was the first thing of interest, Friday. And then we go into the weekend, and then we get a tax deal, or supposedly very close to, tax reform deal. Well, that's probably what this market has been climbing on all along, okay? So I'm going to drop the old axiom. Some of you have probably heard it, maybe some of you haven't, but it's called buy the rumor, sell the news. And that's basically, I think, what happened over the last couple of weeks. We got ourselves in a really nice overbought condition, a little skittishness on Friday, but going into the weekend, still pretty solid. And then a nice Sunday night futures gap up of at least 0.5%, maybe more on other ones. So the market opens up at all-time highs and never even really looks back. I mean, let's just take a look at the intraday. Here's yesterday's open. Maybe a little short covering on the open, and then the profit taking starts. So what's typical of a buy the rumor, sell the news is the sell the news portion. Everybody that was anticipating the market being a forward-looking instrument got what they wanted, and then so when the news comes, that's the smart money taking profits. I mean, if you're going to be a trader that basically just waits for the news to come out and chase the herd wherever it's going, you're never really going to get anywhere. You've got to kind of be contrarian sometimes. And I think what definitely happened was a sell the news event starting yesterday right at the open in the S&P. Look at the Qs. They actually took a pretty good drubbing yesterday. They finished on lows, tried to get some of it back today, peaked their head just above yesterday's close, and then proceeded to head back down towards lows. On the daily chart, we're starting to get those chutes and ladders look again, Andy, aren't we?
Mm-hmm.
We're getting long slides and big reversals and ladders back up and chutes back down. Well, I don't need to look at the single stock window. I can see faintly. This was a very big volume down day with the volume right there. Today's red candle was also above normal on the downside. So we're starting to get those red candles of distribution again. And those were the ones that we saw, back here with a lot of volume to the downside. Market eventually shrugged those off and moved higher. But that is where we are, guys. We're in kind of an overbought situation. And what I said to finish my thought yesterday, I said, okay, so we closed on lows. All right. Well, we're kind of like no harm, no foul. Let's see, everybody, if we can do it 2 days in a row, because we haven't really been able to do that. We'd always wind up with days like this candle right here. Weakness in the morning, the buyers jump in the midday and the afternoon and prop it back up, and we get all these bottoming tails, these buying tails. Well, aside from the buying panic tail on Friday, it's the first time I've seen 2 days in a row with starting on highs and ending on lows with decent volume. So I threw up a little caution yesterday, and I said, let's see what tomorrow holds, meaning today. So if today, as I had said yesterday, if we just do the same old thing we've been doing for a while, we open up weak, and the buyers come in and once again stick save and kick the puck back into play, and we get a nice bottoming wick back up, well then maybe I'll take that little caution flag down for now, but we didn't do that. So I got to keep that caution flag up. I feel like we could be possibly looking for possible, I don't know, I don't want to say correction, but maybe let's call it unwinding of the overbought situation with a couple of these candles. You know, a few down days can start to unwind a lot of overbought conditions and start to help candles and charts set back up for another possible move higher. I'm not calling a top here, guys. Don't get me wrong. I'm not calling a top. I'm just saying I think it's time for the market to take a breath for a few reasons. Friday, we were on a hair trigger. Over the weekend, we get the news the market wanted. Market gaps up and sells off on the news. Well, today we had a chance to bounce back in. We didn't. So we got 2 red candles in a row, something we have not seen in a long, long time. Okay. So where could we go from here? First line of support, you know, could be this prior resistance level that we broke out from. That would be something I'd be watching. Even more dastardly, but even more constructive would be a really nice haircut, a really nice shower that this price action in the S&P 500 could use and maybe come all the way back down and test this trend line again, because we are getting way far away from the trend line. Look what happened back here, guys. We got far away from the trend line, and eventually the price gravitated back to it. So we are really in an anomaly up here in these levels. So I wasn't so much surprised to see the weakness that we had the last 2 days. That's the general S&P 500, probably the best one to look at. The Dow had a great day yesterday because it still closed on highs, even though it finished at lows on the day, but the closing price was still an all-time high for the Dow. But the Dow kind of got the memo today and also finished near lows. And then on the Qs, again, I think we just looked at this one. We're starting to get into chutes and ladders, volatilityville, guys. So when we start to get into volatilityville here, and what do I mean by that? Well, look at the candles. The last 4 out of 5 candles are extremely long compared to this, spinning top here, small doji here. We got some wide ranges going on, 4 out of the last 5 days. So volatility is coming back in. One of the things that you can do to mitigate that and not hurt yourself in your account is to downsize your share size. If you're normally trading 500 shares, maybe you go to 300. If you're normally trading at 200, maybe you go to 100. But that's the one thing that you can do to help control the craziness and the volatility that seems to maybe be coming back in into this market. IWM got pretty ugly pretty fast. I mean, had a big tail. IWM was probably one of the bigger culprits on Friday with that giant bottoming tail and then bouncing back up. But again, I've drawn that orange line going way back here, and we got close to it today. I mean, we basically the rule for the IWM has been at all cost to stay in the positive light. Please keep closing above this orange line, and it did as of today. But let's see what tomorrow brings. If we close below this orange line tomorrow, we're right back into no man's land here, and there's not really much we can say about it or try and discern from it. So a little extra time we spent on the markets in general here today. Andy, anything you want to add?
Yeah. Just I'm glad you showed the IWM, because I want to let you know this is typically how tops are formed. I'm not saying this is a top, but remember how I discussed, back in where the IWM was just kind of going sideways and very bleeding down, and I mentioned I said this in a couple of my webinars, so I wouldn't be surprised if we go and take out highs, because a lot of people are getting short, and it's kind of low risk because it's not a lot of volatility and it's kind of bleeding down. But the point I want to make, it's not that action that you see in October that where your typical tops are made. It's more like what you see now, where you get that and then just catch everybody deer in the headlights. Once again, I'm in the same camp with Steve. Not calling a top right here, but when you do see them, they're typically like the action you're seeing now versus what you saw in October. When
Yeah.
you agree with that, Steve? I mean,
Yeah, I
it
agree.
just doesn't like to give people that long of a chance to get short.
Yeah, and I agree with you. We're not trying to say top here. We're just trying to say,
hmm
let's let this market take an exhalation breath, shall we? And
hmm
reset and see where we can go from there. Ideally, I would have no problem with the spiders returning to this trend line. I think there's nothing
hmm
wrong with that. It's a
No.
market is give and take. It's 3 steps forward and 2 steps back. So, all right, very good, very good market recap. Spent a little bit of extra time there because it has been some different action as of late. Coming into this weekend, it's it, another new high, another new high. Markets at highs, but now we're starting to see a little bit of buffeting, like when an airplane starts to lose its airfoil. Before it stalls, it starts to shake and make a lot of noise, and then it might stall and the nose dips down, and then it catches its air again, it gets the wings, air under its wings again, and moves back up. So it's kind of where I think we are. Again, not calling tops, but we would not be surprised to see some sort of a pullback and a market breather here.
hmm
All right, so let's go to, yeah, you want to say
Well,
something?
just when historically, it's very seldom you see a lot of violent action in December. As we get closer to the
Yes.
holidays and volume dries up, I think it would. Who knows? I have no idea because we've seen some crazy. You know, I just throw out everything out the window. But it's rare that you see a major top established in the middle of December. But who knows?
Who knows? This
Yeah,
this year has been this year has been anything but traditional. All right, let
exactly.
me fire up the Holly trades here. Now, if you were with us again yesterday, this is kind of a mirror image of what happened yesterday. Now, I came in today, as I talk about, what's the first thing I do? I look to see how many strategies are in here and how many longs and shorts. I got to tell you, after the weakness we had yesterday and the volatility we had on Friday, I was kind of disappointed to only see one short strategy make the cut today, selling strength with everything else being long. For those that were in the webinar yesterday with Jamie, it was the same kind of thing. Holly had a long bias, and a lot of longs were tried, but with the backdrop of what we had yesterday, it just didn't pan out. And so here we are again today, and I want to share with you something that I saw earlier this morning about 70 minutes after the open. A lot of people say, well, how do you like to use Holly, Steve? I said, well, not so much always on the individual basis, but what's the bigger picture? What is the AI trying to tell us? Well, the AI was trying to tell us, one, that it didn't have a lot of short setups, so it was kind of fighting with just one hand behind its back today. But two, 70 minutes into the day, we had 7 long strategies, trades trigger. And this is something I have not seen in a while. 3 out of those 7 were stopped out very early on. So when we talk about Holly, the AI, being our non-emotional canary in the coal mine, if you're coming in today and you've got your little watch list and you're ready to go and mostly long, you don't like to short, you only like to go long, the AI was basically telling you it's going to be a difficult day, okay? Because I have not seen that many stops hit so quickly on the
hmm
day when the AI was favoring, as I call it, directional bias. So there was a lot of conflicting mixed signals in the bigger picture coming into today. And so I wanted to screenshot this morning. I didn't know how the market was going to end up. I didn't know if the buyers were going to come back in, but all I knew was going long was not working 70 minutes into the day, as evidenced by 3 stop hits. I mean, that's pretty aggressive. Usually we don't see that many stop hits on Holly, especially that early in the morning. So as a weather vane or a canary in the coal mine, the AI was telling us early on today that going long is not easy today. And so that's the big takeaway that I took. Before I turn it over to Andy, if there's anything he wants to talk about, maybe this is some stealing his thunder here, but on a per trade basis, the only thing that I thought was really interesting was Etsy. And we're going to go back to the same thing we always talk about. Look left. Start on the daily chart and look left. All right. So there was Holly's buy above a breakout. That was today. You guys also might notice Holly had a buy yesterday and sold at the end of the day for a profit. So coming off the heels of a Holly buy yesterday in that candle, we had another one today, so 2 in a row. And looking at that daily chart, I'll tell you what, guys, if we didn't have the downdraft that we have in the Qs and Spiders and Dow, this Etsy may have done a lot better. But the thing still finished positive on the day, which is pretty impressive. So I'm highlighting this because, again, as the stocks come through, I just always want to look left and see where the resistance is. And on stocks like these, where it's a clear breakout, it's unfortunate that we didn't have a nicer backdrop in the market to help us push through with more vigor through that level. But nothing else really stuck out to me aside from, as I said earlier, the 3 stop outs. We usually don't have that many stop outs that quickly in the day, so it was kind of giving me a gauge as to how strong the misdirection was for the AI today. All right,
Exactly.
so go ahead, and if you want to add
The only thing I want to add, if you'll pull back up that the picture you had up there.
which one?
The one about the stop outs, the one you just recently had. Yeah. And Steve's right, and this is information that you can garner from Holly, besides some of the great trades she calls out. But when you see those get stopped out real quick, and look at the AI strategy window. Look at your top 2 performing or optimized strategies. So those 3 stocks all come from the highest 2 winning percentage and profit factors after the optimizing the night before. And one of them is on support. It's one that we really love because you're contrarian, so you're buying a stock that's kind of pulling back, and still these 3 trades all got stopped out and even went lower. So when you see things like that, and you see the market almost, kind of trying to make a move higher, I would be skeptical about that. And sure enough, the spiders did roll over. And
there's that trade, Andy. There's that on support trade you mentioned.
Yeah.
It looked like a decent entry. It tried. It gave people a little better price, and it tried, and the midday is what the market was doing midday. But this is why you got to keep one eye on what the Qs and the Nasdaq, the Qs and the spiders are doing. Oh my. Started to leak back into the close. So, yeah, interesting. Okay. All right. So we got a few more things I want to talk about today. So that was kind of it for Holly. Again, don't look at it in a granular level. Try and pull back and look at it in the bigger picture sometimes. If you're sitting here in an open position window and the market's sleepy, I'll tell you what, and all of a sudden Holly busts out with 3 shorts out of the blue, short, in a matter of 5 minutes, pay attention to what the indexes are about ready to do, because in my experience, when I see a flurry of directional bias pop into a quiet market like that, typically the indexes will start to follow in the same direction. So that can also be something to watch out for. All right, so that being said, trade of the week, let's go fishing. So this is the 2nd week in a row that we used let's go fishing, which is this alert right here. And we'll break it open and we'll even share it, because I know people are going to maybe want to take a look at it themselves. But last week was Spirit Air. And, basically what Let's Go Fishing is looking for, it's kind of like the trend change lubricant. But the trend change lubricant, the special sauce, is looking for stocks like this that have broken down and building a base and moving back up. But our key is the short float percentage, looking for a short squeeze. Whereas the Let's Go Fishing is not concerning itself so much with a short squeeze, but looking for solid fundamentals and hoping that institutions will, come to their senses and say, hey, we need to buy this thing. This thing's solid company. It's making money, and it looks like it's technically trying to make a turn. So we'll look at the configuration there in a second. But last week, I want to talk a little bit about SAVE. So a very nice push higher through our alerts, and up here, that's actually about an 11.5% move, believe it or not. And I want to share with you one of the strategies that Andy and I used to use when we did the Ditto Trade mirrored account. And that was an account with Ditto Trade where other people opened up accounts with the brokerage Ditto Trade and basically tagged along on our trades. And one of the reasons we had success in that account and outperforming the market was not getting complacent and trying to stay ahead of the game. But one of the things we would do is once we got up 8, 9, 10%, we'd start taking off thirds or a quarter or a half. You can't go broke taking a profit. And a lot of times you guys have also heard me say this market has a very difficult time going more than 3 or 4 days in one direction without some sort of a hiccup or a breath. So if you're in the money on SAVE and you haven't taken any off, you may want to consider doing so, because it's a good money management philosophy. I originally called it the 20% rule. And what that meant was like, let's forget a trade. Let's talk about the trading day. Let's say the trading day, the 20% rule kicked in at $1,000. So if I was up $1,000 and seeing everything clearly, But by lunchtime, I gave back 200. That's a 20% give back. And that's when I used to shut it down and say, nope, I am not going home empty-handed. I did a good job. It's kind of like the Holly profit save, right? So that's the mentality that we want to try and implore to you guys as well when we are lucky enough to get a good trade of the week that does exactly what it's supposed to do out of the gate and gives us 11% in 1 week's time. That's the cue to take a little bit off. And we call that the 20% rule. Well, taking a little bit off, you can take it off wherever, but where you don't want it to go below would be the 20% rule. Let me just clarify that. So in this case, maybe that 20% rule might be something right around there, disregarding that that shakeout we had on today, actually, as a matter of fact. So it recovered nicely, but once you've got some money in your pocket, 8-10% in the right direction, don't give it back. And so if you're up $1, you got 20 cents to work with, or I guess I should try and use percentages. If you're up 10%, you've got 2% give back to work with. We'll call that the 20% rule. So that was last week. Spirit Air is still intact. This would probably be a perfect candidate where we talk about sell half and then just see what happens with the other half. I'll tell you what, that candle today, it's not what the market did, but if we break it down a little bit more, well, we got more to talk about. This was all on the open. And again, back to the ditto trade days when Andy and Steve were in a position where we did not want to risk getting stopped out of a position on a first 15-minute stop hunt, which is what this seems to be. The first 15 minutes here was nothing more than open and then downdraft on huge volume and then all the way back up. And then this really right here kind of became the floor for the day. So stop outs and stop hunts will occur in the first 15 minutes. And if you're brave enough and you see the logic in it, you can pull those hard stops from E-Trade and Ameritrade, because I'm telling you, those algorithms, they see the whole chessboard, and when they smell blood, they're going to circle like vultures and they're going to run you out in the first 15 minutes. And so we always hated being that person being stopped out of the first 15 minutes. So many times we would pull our stop, and then once the stock recovered, we would let the action of the day kind of dictate if we wanted to stay in or get out. But that first 15 minutes is just BS. But it is what it is. We got to deal with it. It's the market we have. So fast forward to this week. Coming into the week, we had an old favorite that we've been kind of watching, IBM. A couple reasons outside of the let's go fishing that we like. IBM surprised with upside profits. Big gap up after earnings. A lot of people bought this day, short covering, buying this day, and then what do you know? The give back. And where did it go? It went right back to the gap. Not only did it go to the gap, it tried to run the stops.
Overshoot a little bit.
Gap, overshooting it just to see if they could run some stops. I'll tell you what, guys, if this red candle had been on a Friday, IBM just would have been called probably point blank, carte blanche, do it. Yep. But it didn't, and the timing wasn't right. Well, then fast forward a little bit. We got a nice bounce out of that, and then we got what we always like to see, sideways. 4 days of sideways consolidation. No price give back, just sideways consolidation. And looky here, this buy tag means that on that particular day, Holly saw something probably volume related and probably breaking out of that little wedge, decided to call it out that day. So coming into the weekend, we had a Holly buy on a Wednesday, and then we had this one big downdraft candle and the up candle from the craziness on Friday. But as it were, it showed up on Let's Go Fishing. And once again, Let's Go Fishing is looking for quality stocks with good fundamentals on stocks that they're down for the year. On a 52-week basis, they're definitely not doing well on a 52-week basis, but they're a solid fundamental company. So that particular high on that day, I'll just draw it once again, corresponded to these highs over here and kind of the congestion for the most part over there. So, based on the fact that we loved it down here, Holly loved it here, this is a very solid company. It's not going anywhere, and you can't discount the irony of IBM Watson, who just decided to start venturing into the financial markets. And AEIQ, if you didn't realize it, is a brand new issue. It's kind of a tracking stock of the Watson AI. But here's what I find interesting. You see that candle right there? I think Watson's basically just kind of piggybacking and shadowing the S&P and the indexes. I don't think Watson really has anything on its own that it's coming up with to try and do anything different than what Holly's doing, because, you know, here's AIQ over the last month or so, and basically here is the AI since July on risk on. Risk on means taking it on an extra day. So, you know, the S&P in blue, and this is our proprietary back office stuff, is being totally overshadowed by the risk on mode of Holly. We could switch to risk off too real quick, and I can show you there's still a nice separation, but risk on has been kind of the way it's been going lately. And so back to this chart looks nothing like what the Holly chart looks like. Why? Because Watson's taking a different approach. Watson's probably looking at earnings and seasonals and fundamentals and correlations and other things, whereas Holly, the AI, not Watson, but Holly, is looking at pure technical analysis, not concerning with fundamentals unless fundamentals are a part of the scan that you know, that has been sent in as the base strategy to Holly. So IBM was triggered yesterday right off the open, and it was interesting because yesterday, as I mentioned earlier, look at the Qs on the open yesterday. Gap up and slam, a slight bounce, and then slam right into the close. All the while, our little IBM had a decent green day and finished near highs. However, the downdraft got a hold of it today. Basically just above the entry point, so maybe we'll get what we got earlier, kind of some sideways action. That's what I'm really hoping for IBM here. Sideways action and then move higher. But again, if the market starts to correct, that is going to have an effect on IBM. It's going to have an effect on Spirit Air. It's going to have an effect on everything. So, you know, the backdrop of the market is going to really determine where we go from here. But I'm not at all concerned about the action in IBM. We broke through where we needed to break through, and maybe we'll just go sideways for a little while. But I think this is a very strong company. So speaking of, the Let's Go Fishing alert. I'm just going to go ahead and drop that in the chat window right now because I know somebody's going to ask. So I'm going to type in Let's Go Fishing. All right, and then here's how we take the cloud code, save and share. And you guys, anybody that wants it can open up that chat window and you have access to that cloud code now, which will allow you guys to bring down this exact alert. So what exactly is this alert looking for? So again, it's kind of like the trend change lubricant, looking for stocks that are beat up, $5 minimum. Very important key filter is position in your range. Maximum 35%. It's the same with the trend change lubricant. These are stocks that we only want to see that are no more than 35% above their lows of the 52-week low. So it's going to be an ugly daily chart. It's not going to look like, you know, the SPYs and Qs do today. It's or the last week, I should say. It's going to be beaten up. But then we say, all right, well, instead of going for the short float exploitation, this is all Andy saying, I'm going to go for the fundamental strength. So this thing needs to have a price earnings ratio of at least 30. This thing needs to have a cash to debt ratio of at least 0.2 or better. It's got to be making earnings per share of at least $1 a year, which is significant for any company. And then we get back to the technicals here. Position in 10-day range, 98%. It's just the opposite of position in year range. This is looking back 10 days and saying, only show me the stocks that are 2% or just a few ticks away from breaking out of a 10-day range. And hopefully the volume, hopefully the volume and the fundamentals will show up on the radar of institutions. 500,000 shares a day average volume is very, very healthy. Institutions can play in that realm. So that's the breakdown. Again, kind of like trend change lubricant, but not focused on short float, instead focused on good fundamentals. And that is where Spirit Air and IBM have come to be the trade of the week for the last 2 weeks. Now, before we move on, again, the trade of the week, one of the first things we're always looking for is stocks that have a shot, okay? Save, Spirit Air, it has a shot to get back up to these levels. That's a significant gain based on our entry down here. But when you take stocks like Micron and you start calling Micron on out up here because it broke out of this wedge, it goes back to what I was talking about at the beginning of the session. Overbought. overbought starts to mean stair steps up, escalator down. The last thing we want to do is call a trade of the week that looks super healthy, but for whatever reason, all of a sudden had a nice 10% correction in 2 days. That's not what we're looking for. We're looking for stuff that can change the trend and come out of where it's been. IBM changed the trend, come out of filling that gap perfectly, and then moving back up. So that's where we are, and that was the trade of the week. And using the Let's Go Fishing, which I have dropped into the chat window, and I'll go ahead and minimize and put that one back on the shelf. Okay. Yeah, Lance, setting an alert for halts is real simple. All you got to do is just right-click Alert Window, search for halt, and there it is. What's the opposite of halt? Resume, and there's resume. So all you have to do is just basically type in halt, grab that alert, add that alert, select that alert, and you're on your way. Now all you got to do is just start doing filters. But that's all you have to do to create a halt alert. All right, I just saw that question and I didn't want to let it sit.
No problem.
Have you ever had any luck buying at the bottom of a stop hunt? No, it's hard, David, because it happens in the blink of an eye. When you look at those charts, pull up a 5-minute or a 2-minute chart, and you'll see that the bell rang, and it was a flash all the way down and a flash all the way back up. I mean, almost faster than you can even react to it. What we would prefer doing is looking stocks on the daily chart like IBM and buying those washouts when we're prepared for them as they fill a gap or a significant level on the daily chart. You know, last year we called Facebook. I'm not going to go back in the history, it's too far back, but Andy remembers that we actually called a trade of the week. We said, if Facebook comes back and fills the gap, much like IBM did right here, we like it. And Facebook did the exact same thing. It blew through for about a half an hour, and then it bounced and never looked back. So we've been known to use actual gap fills for a trade of the week call as well. All right, where to next? I think it's the flip. Yeah, the flip. So some of you are probably aware that we have a button in our configuration called flip. And basically what it means is, rather than racking your brain and trying to invert all of the filters and all of the other things that you've done to invert a bullish strategy into a mirror image and make it a bearish strategy, we've got a real simple tool for you to do that. And we're going to use this top list here, the pullback above 50 SMA, as an example. So let's take a look at some of these charts here, just real quick, of the bullish setup, pulling back to the 50. There's our pullback above the 50. AU. This one did pull back to a significant level. CLNT, pull back to its 50. SCBGL, down here, it is a pullback. Another beautiful setup, nice big move. Took a lot of time to pull back and trying to dig in. So you get the idea. That's what this particular strategy is looking for. Pullbacks above the 50. This is the classic buy the dip BTFD scan that we have. Well, what's going to happen if capital IF, the market does turn in 2018, and we look back and we say, wow, what an amazing year 2017 was. Looks like 218 is going to be maybe a little bit of give back. So what that means is buy the dip is not going to work. So what could we do to try and, mitigate the strategies that aren't working anymore and not beat our head against the desk doing the old Einstein thing, trying the same thing over and over and having it not work? And that's the definition of insanity, because you keep trying it. Well, here we go. So let's take this bullish pullback, looking for charts like this. Great example, PSTC, buy the dip. Well, if we get into a market where all of a sudden we keep selling off and the dips get pushed through, and then we get a day or two of bounce, and then that day or two of bounce starts to peter out and the sellers come back in and roll back over, that's a classic sell the rip. That's a classic bear market, something people have not seen in years. So what we can do is, first thing you want to do is duplicate it so you don't ruin your first copy. But if we duplicate that alert, we go into configure, and all we do is use the handy dandy flip button as soon as it becomes available to me, and there it is. Flipping it just inverted all of the filters that I need inverted. And that's it. Now we have a whole new list, and let's take a look at the kind of stuff this is spitting out. Interesting. There's our 3 or 4 day bounce, possibly running out of steam. Trust me, the 50-day moving average is now above it. So we might as well call this bounce up. Let's just do it right now. Bounce up to the 50-day moving average. because that's what we're doing. All right, let's take a look at a couple more just to get a feel. All right, downtrend, downtrend, bounce up. Again, it's the exact opposite of PSTG, uptrend, buy the dip. It's all good. Well, that's not going to last forever. At some point, that's going to change. And if we have a strategy like that we can take and flip it upside down, there it is. There's the mirror image. So this BPL, probably not a bad idea for short sellers. It can't get above that resistance, a couple of topping wicks. This thing might be red tomorrow and ready for a short sell. So hopefully that makes sense. The flip button, giving us ideas coming off of a bounce to go ahead and fade that bounce. You've heard us talk a lot about the Holly strategies that are short. We tend to prefer the ones that are fading a bounce rather than trying to accelerate through yesterday's low. So that is the flip button. Anything you want to add, Mr. Andy?
No, that's good. Yeah, it's very wise to be prepared, and have some of these strategies flipped. So when the time does come, and it is coming, you're prepared.
I'm not sure why somebody's asking me about arrows. Please, Bull, deal with the short and old news. Well, let's go ahead and just go right into some chart requests. Let's just do 5 or 6 chart requests. If you guys are sitting on them, go ahead and send them in. John says arrows, please. Bull. Okay, so you're a bull on arrows. Deal with the short and old news. I haven't followed this stock much, John, and honestly, I don't know any of the news that's coming out of it. All I can do is look at the footprints in the sand. Okay, so you're long at today's washout alert. Or would that be yesterday's washout alert? Either way, you didn't get long up here, you got long down here. So I would say, a good place to probably, keep your out, aggressively is the bottom of that wick down there. If you want something a little bit more conservative, the very bottom of today's suggested smart stop would be probably the quick and fast easy out. If you really have conviction on this and you know the news better than I do, then maybe you want to sit through something down to 1030. I don't know. That would be your call. But in the bigger picture, it's not trending. It's kind of just going sideways. That did seem to be a pretty good washout, and it was a midday washout yesterday, so it didn't happen on the open. That's about the best I could give you on that one. I don't know what else to say. Okay, let's go. Okay, Marvell, thinking of going long at some point. No, Marvell, thinking about going long at some point. Marvell has had a lot of gap ups. We basically filled this gap today. So, I mean, if you were super eager to jump into Marvell right now, this would be your downside, 2172. If that doesn't hold, then we've got this giant void down here that could start to get a little ominous. I would keep my eye on the semiconductor index, because Marvell is a semi. And if this is the worst it's going to get for the SMHs, then that Marvell might not be a bad buy here. So keep an eye on MU and Marvell, SMHs. I don't know if NVIDIA comes into play either, but they've all kind of been the same. AMD, AMD's not been as good as the other ones at all. I'd keep my eye closely on those SMHs. Today, the SMHs were pretty strong, and then they sold off a little bit. But as far as Marvell goes, I think the near-term downside at 2170 has been set. So beyond that, it could be a big drop down here to the $18 level. Okay, EMN. EMN, that's it, EMN. Okay, well, Joe, as you know me, I probably like that washout bounce candle. Let's see when that occurred today. It occurred on the open, and it wasn't so much of a down and up spike on the open. It was just a lot of selling, and then they just ran out of sellers. So it was 30 minutes of selling and then buying back for the rest of the day. The good news is the stock is in an uptrend. It did have 2 consecutive down days, not bad. I always like to see at least 2 down days coming into that washout, and you got yourself a perfect Christian doji right there. The cross opened right where it closed. Not a bad looking chart, and I would even again defer to the trade ideas, smart logic, stop out. probably a good spot. Again, Trade Ideas did not come up with the smart stop out of thin air. There's reasoning for it. And since we're kind of close and it's midway through this tail, if you start to trade back down through that tail, I really don't want to see that. I'd like to see the price build off of today's close. So that's probably a good stop for you. MU, we were talking about MU, and MU is really close to what the SMHs look like. MU also is a trade of the week that was called way back here, guys, right about there. Once again, highlighting the fact that we're not calling out MU up here. We call it out MU down here at this congestion, because when the music stops on these high flyers like this that are trending and getting way overbought, musical chairs game is no fun when the music stops and you can't find a good chair. However, let's look at this technically. I see a lot of reasons for the bounce right here. For the most part, we had some support back here, and that's where yesterday's bounce occurred. So I would like to see it, build a base here and try and move higher. Even at these levels, look at where it's come from. It's come from $9 all the way up to 50. So if we were to draw a trend line from here, I guess what I'm going to say in a moment is if that baseline doesn't, here we go, there's my trend line. If that baseline that I just drew doesn't hold, well, then we got to kind of defer to the trend line and look at that. It's lining up pretty close. So that's how far we are above the trend line, believe it or not, in Micron. It's whether or not this pivot level decides to hold for you. If it doesn't, I would forget it down here in no man's land and let it come back down to safer pastures where the trend line is. Okay, we've got time for a couple more. PETZ, and you are long. Okay, what is this? TDH Holding, dog and cat food manufacturing. So it's definitely a low cap stock. 68 million market cap. Small company, and it looks like it's a new issue as well, because I can't go farther back than that. So the good news is, let's draw a line on the new issue. What I like to do is, first thing I like to do, I should say, is put in a line as to where the low of the IPO day was. And you can see exactly what happened, guys. It was a foregone conclusion that the price was going to go down and going to test the low of day one of trading back here, and it did. And it didn't get much really weakness below it. It spent a lot of energy getting down to these levels, and once it lifted the carpet to see what was underneath it, there wasn't much there in terms of follow through. So this is a decent entry down here, I can give you that, but that 650, that 660 level is going to be one you're going to want to watch. Today's candle didn't close on highs. It would have been nice to see it close on highs because, relative strength versus what the market did. If the price action comes back down and wants to come back and test this level again, I'd have your hand on the hair trigger to not be involved. Typically on these bounces, I'd like to see a little bit more vigorous bounce. Great volume today and yesterday, but the candle just didn't quite close on highs as it could have.
It was a tough tape, though. It was a tough tape.
Yeah.
But Steve's right. I think you have to use the low of those two bars where it kind of already tested the opening low, and because below that there's just nothing. I mean, it's just
yeah, it's a new issue. We don't want to go. Yeah. We don't want to go the way of Snap
or Apron.
Apron's the ugliest of all. Here was day number one of trading. Whoops! I did not mean to pin this window. Don't you ever do that again. Don't you ever think about doing that. Just highlighting. See, there's the low of the first couple of days of trading in Apron. So, back to your stock, it can go lower. So just be careful with that. And so with that, I'm going to go ahead and say thank you all for showing up. That's about the most content I have for you all today. Let's keep an eye tomorrow and see if the buyers want to step in at the close or midday. If we close again a third day on lows, we may have a little change in the winds here going forward. I think this market's going to try and hold on to all the gains it possibly can for 17.
I think so.
And then once 2018 comes around, who knows? All bets are off. All right, cool. Scott, come on back in and do what you got to do and give them a promo code.
Cool, thank you. A couple items. The first one is that we have a podcast. If you're not yet a subscriber, we invite you to subscribe. There'll be a new one up on Friday, a couple hours after the markets close. So just search for Trade Ideas Podcast in whatever app you listen to podcasts in. It'll pop right up, whether it's iTunes, Stitcher, Overcast, whatever app. Just do it, add us, and listen to some archived episodes too. Listen to last week's and get ready for the new one. We do have a promo code. Save 15% off your first month or year with Holly Jolly. Use all caps like you see it on the screen because it is case sensitive. And whatever subscription you choose, whether it's the $99 a month, $80.88, or premium for $188 or $18.88 a year, they all include a full hour of one-on-one training with one of our educators like Steve or Andy. Also, you could choose Jamie or Sean also. But remember that free training is a great way to get all your questions answered and get your stuff set up exactly the way it's going to work best for you. So don't neglect it. Take advantage of it. It comes with your subscription. And do take advantage of this code before the month's over. It will expire. You can also download some handouts. Just go to your handout panel and you go to webinar interface and click the blue link to download a PDF with this code and our contact information, all that good stuff. If you have any questions, shoot us an email. info@trade-ideas.com is the help desk email, or you can reach out to Steve directly. He's Steve at Trade Ideas. Andy is Andy at Trade Ideas. Follow Steve at Today Trader on Twitter. He's got a lot of good stuff. And Dan Merkin, our CEO, is at Trade Ideas 1, always entertaining. Follow us on Facebook or like our page so you get our updates there too. /Trade Ideas Pro is the handle on Facebook. And if you do that, you'll see new stuff in the stream there. We sometimes don't post elsewhere, and you'll be able to share that with your friends. So it's a great way to share the love. Thanks, Steve and Andy. We'll get the recording out later on.
Cool.
Yeah.
All right. Thanks, everybody.
See you next week.
Have a good evening.
Bye-bye.